Hi everyone, in this video I'm going to explain you the basics of Elliott Wave Theory. My entire strategy is based on Elliott Wave and as well with Fibonacci combined with Macd. If you want to learn more about my trading style and about Elliott Wave in depth, you can head over to my website bengraphics.com and either take my beginner to advanced trading course for $149, or you can head over to membership and then take my course with a 1 month free membership. You pay once $149 and then $49 monthly. If you go back and go to courses, you can access my course over here. And this is the course content. Just a welcome page, common terminology, how to work with Binance, charting 101, how to set up TradingView, then an extensive theory or lesson about Elliott Wave Theory, the classical chart patterns, my trading strategy, and then psychology, how to be profitable and keep your emotions under control. You can take this course at any time. This will be lifetime updated as well. So, Elliott Wave says that the market moves in 5 waves. If you head over to TradingView, you can click on Elliott Wave Impulse Wave. So the market moves in 1, a second wave down, a third wave up, a fourth wave down, and a fifth one to the upside. Then to measure all the targets of the fourth wave, the third wave, and the fifth wave, we can use Fibonacci. There are some probabilities, so you have to make sure that you are thinking in probabilities with this particular theory. So to measure that second wave, we take the normal Fib retracement from the bottom to the top. And then there are 2 probabilities. We have, or either 3 probabilities. The first one is a 0.5 Fib, and the second one is the golden pockets region, which is that level over here. And then the third one is a 0.786 Fib. So once you see a first wave and then a second wave, you can start buying around these levels. In that first wave, you'll see another 5 waves in here. And then in the second wave, it mostly moves in a correction pattern as an A, B, and a C wave to the downside. So then as well in the third wave, we have 1, 2, 3, 4, and 5. And then in the fifth wave, we have 1, 2, 3, 4, and 5 as well. And here the fourth wave, we might make something like this. This is called a triangle. So if this one is steep to the downside, then this will be a consolidation, or rather a sideways move. So now that we measured our second wave, we have to target our third wave, which has 2 probabilities, also using the trend-based Fib extensions. So for the first one, for the correction patterns, the second one and the fourth one, we use a Fib retracement. And for measuring the waves to the upside, we use a trend-based Fib extension. So we go from the bottom of wave 1 towards the top of wave 1 towards the bottom of wave 2. And then we actually have 2 probabilities, which are the 1.618 and the 2.618. So mostly it will go towards that 1.618, but we can have an extended third wave all the way here. Then to measure our fourth wave, we take our Fib retracement again from the bottom of wave 2 towards the top of wave 3, and we have 2 probabilities again, the 0.236 and the 0.382 Fib. So in here we can make something like this. There you go. So that would be the end of the fourth wave. And then to measure our fifth wave, we take the trend-based Fib extension again. We start from the bottom, so we have two ways to measuring that. We start from the bottom of wave 1, towards the top of wave 1, towards the bottom of wave 4. And then at first we measure a 1-to-1 extension, so the same length of that first wave, like that. Or we can take it from the bottom of wave 1, towards the top of wave 3, towards the bottom of wave 4, and measure the 0.618 and the 0.786. Mostly it will actually go towards that 0.786 Fib. Definitely in crypto, we've seen that being the case most of the time. And as well in here, you get 5 waves to the upside. So I also work with the Macd to measuring where we are at the Elliott wave count. So this is called the Macd. You can add it with your indicators. And then Macd, moving average, convergence, divergence. So for now, this is not the correct Macd that belongs to this particular wave, but I'm going to show you how I'm using it. So if this is a Macd, on the third wave, we'll have a peak on the Macd. Then the Macd will start falling down and make a lower high on the Macd for that fifth wave. So you see that on the peak of that third wave, you will reach the highest Macd form, and then a lower high over here with a higher high on price action. This is called a bearish divergence. Now I'm going to show this on the Bitcoin chart. So to me, firstly what I'm looking at is counting the waves. 1, 2, 3, 4, 5. So then we look with the Fibonacci levels. If we take the normal Fib retracement from the bottom to the top, then we can see that it actually reached that 0.66 Fib, so the golden ratio for that second wave. Then to measure that third wave, we take our trend-based Fib extension from the bottom of wave 1 towards the top of wave 1 towards the bottom of wave 2. And as well here we had 2 probabilities, with the first one being the 1.618. We touched that and we fell down towards that fourth wave. So then again, starting from the second wave towards the top of that fourth wave, we have 2 probabilities, the 0.382 and the 0.236 Fib. And we touched that 0.236 Fib. So then we only need to measure our fifth wave, which I was able to take my profit here for all my cryptocurrencies. We haven't reached that 0.618 or the 0.786 yet. So either we can still go towards that one, or we do have another probability or strategy to count this. We start from the wave 1 towards the top, towards the bottom of wave 4, and we measure that 1-to-1 extension. And in here we can see that we touched that 1-to-1 extension and then started going down. So now we've already finished that fifth wave, or we could have a 1, 2, 3, 4, and then a fifth wave going all the way up there. So then my second probability would be around 110k, and my last one would be around 280k. Then in here, we can do the same. We measured at 1.618. We did have that COVID dump over here, so it doesn't align exactly, but we did reach that 1.618, so I would call that a third wave. So now I'm thinking, was this a correction pattern, an A, B, C, or was this the fourth wave? And was this the fifth wave? Let's measure. The 0.618 and the 0.786. As you can see, we reached that 0.618 fib on the fifth wave. So I do think that we might have ended or finished that fifth wave. But we can also use it on a log scale. And then this would be 4, and this would be 5. So there's still some movement left. Once we can surpass that level over here, then I would be more confident for another 300% rise. So this was it for now. If you want to learn more about trading or analyzing charts, you can always follow me on Twitter, Ben Gravis. If you like my content, do not forget to click that subscribe button, or follow me on Twitter, Ben Gravis, for more daily updates.